Hey guys, welcome back to the channel. My name's Max Convexity. My channel's name's The Covered Caller, and I like to talk about the high income covered call fund space. And we got a special guest tonight. Jackson, come here. Come here. Check out Jackson. It's really cold here today, so I have a sweater on Jackson. He loves wearing it. I can't believe he lets me put it on. Come here, Jackson. Come here. It's a turtleneck. Can you guys see this? I wish I had a better. I mean, Jackson. He's such a silly dog. He's a good boy. Such a good boy. All right. All righty. Let's get this show on the road, guys. I have a drink in here. Hang on. I need my Jackson. What did you do with my drink? Here it is. All right, I'm really enjoying my new studio. Hopefully my content will get better because I'm able to hopefully my content will get better. All right, guys, thank you so much for being here. I don't really like my camera position. It doesn't go the right angle. Okay, anyway, it's still not the way I like it. All right, guys. How are you doing, Chad? How are you doing, Jeff? Jeff, you were here Friday night for that late live stream. I did like a midnight live stream on Friday night. I think you were here, right, Jeff? But I don't think Chad was here. But of course, Chad over there in the beautiful city of Orange, Texas, I believe, was probably at the club, probably out two-stepping, doing something. I don't know. Jackson, what do you want? That's all I got. Oh, come here, Jackson. You want another treat? Hang on. I got one more treat for Jackson. All right. Come here. Come here. Show everyone your pretty sweater. I just think that turtleneck. He looks like a professor or something in his turtleneck. All right, Jackson. That's it. That's all the treats. All right. Go sit down, buddy. All right. Looks like people are showing up. Bond showed up. But anyway, some of you guys were there the other night. Some of you weren't. I think Chad was at the club, or maybe I just forgot. Chad, if you're there and I forgot, I'm sorry. Anyway, we had a good live stream. It was a live stream about nothing. I didn't even really have anything to talk about. Remember, I just want to test out the new studio, and it ended up being like an hour and 40 minutes as we just shot the breeze. All right, guys. Tonight's going to be the daily factor, the top 20 high yield ETFs of the week according to the max factor, more specifically the short term max factor or the max factor trading index. So the trading index, and this is the max factor we look at all the time. It factors momentum into the equation quite a bit, whereas the longer term max factor doesn't factor momentum in quite as much because it looks at a year's worth of data. The max factor isn't perfect. I like it. I think it's a good metric anyway, but it shows us, I think it does a pretty good job of showing us what are the 20 hottest funds this quarter. So anyway, let's see what it says, and we'll see if we agree, disagree, love it, hate it, whatever. Jackson, buddy, that's all I got. That's all I got. And you have food in your bowl. That's it. Go sit down. Carl's in the house. Thank you for being here, Carl. Carl, Bond, Chad, and Jeff. All right. All right. So all right. Here we go. Top 20 max factor. If you were watching the Friday night show, you know the results of we took a peek at this. Anyway, whatever. Pretend like you didn't see it. Number 20 is a dog. Wow. DOGG. Does everyone know what that is? Based on the dogs of the Dow strategy, which is not a dividend strategy, but it's kind of a dividend strategy. It's not really so much an income strategy, but it's a value investing strategy that they adapted, and they're using those stocks. So it's the dogs of the Dow strategy invest in a subset of 10 out of the 30 Dow industrial stocks, and it invests in the 10 highest value. So, or biggest laggards is another way to put it. That's why it's called dogs of the Dow. It's they invest in the 10 stocks that did the worst the past year. Generally, I think that's part of it. Anyway, all right. There's several different ways to do it, but basically that's it. You look at the stocks that did the worst in the previous year, and you buy the 10 of them that did the worst, and expect mean reversion to happen during the course of next year. Anyway, this thing's done a great. It's done a good job. It only yields 8.6%. All right, number 19 is XLEI. Wow, this one is XLEI. Okay, so let's just look at this. Let's just look at this instead of just hearing me talk about it like I did Dogs of the Dow. XLEI, of course, is the State Street Energy Select Sector SPDR Premium Income ETF. Anyway, energy-based covered call fund from State Street. It has a bunch of other ones in different sectors. All right. Number 18 is GLDI. Now, this one is based on gold, and I'm pretty sure that's going to be a theme we're going to see tonight. But this one, GLDY is from Defiance, right? It kind of has that Defiance Yield Max chart pattern going, but you know, same story. Pays a giant yield though. Anyway, all right. Defiance Gold Options Income Enhanced ETF. All right. I never did get that one. I was thinking about getting that one, but I didn't. I'm glad to see that it's finally on the top 20. I don't think it's ever been on the top 20 before. It just hasn't been the best performing fund compared to some of the other ones. All right. Number 17 is ASGI. So this is one of those closed-end funds. Did I not punch that in? All right. Aberdeen Global Infrastructure. Been a great time for global infrastructure, right? I know a lot of you guys like that one. Closed-end funds can be great in retirement. Pays a monthly payment. 21 cents, 21 cents, 21 cents, 21 cents. How about that for retirement planning? Pays the same thing every month. It comes out to about 11%, 10 or 11%, give or take. I mean, and lately it's giving you NAV return also. It's already up 1.1% for the year, and it was up 26% last year. Good looking fund there. All right, number 16 is GGN. All right, GGN. This is the Guggen. Oh, I thought it was Guggenheim. No, it's the Gameco. Okay, well, Gameco Global Natural Resource Income. Well, okay, you know, natural resources. What else do you need to know? This thing's freaking on fire. It's Houston, Chad. For some reason, I thought it was orange. I don't know. I get out over my skis. But anyway, yeah, Houston. All right. Let's see. I don't like the way that this. All right. Okay. Let's see who's next. So far, just in the top 5, we have value stocks, energy, gold, closed-end funds that are global infrastructure. So I don't know what you really call that. And then whatever GGN is. Also, I mean, obviously also a closed-end fund, but natural resources, of course. All right, so we have a theme going here. Number 15 is SPIN. Now, SPIN is interesting. It only pays an 8.1% yield. It's a covered call fund. It's actually an S&P fund. And the interesting thing about SPIN to me is it's based on the State Street. It's from State Street. Okay, so it's a State Street U.S. equity premium income. Well, what's the difference between that and like I mean, there's XLKI is technology. So, I mean, but this is also State Street Select Sector. So I guess SPIN is just no sector. It's the entire S&P, which is cool because it's an index that that State Street actually owns, which is the SPY. So you presume they know how to trade it, and it looks like they've been doing a decent job. Look, the NAV took its April pullback back in mid-July or August. That's pretty good for a covered call fund. A lot of covered call funds, there's some covered call funds that still haven't taken their high back, their previous high back. Watch, like I bet you, I don't know, let's look at the cover. Yeah. Well, XYLD, it did take it back, but it took it all the way out to December. Anyway, you see that SPIN just has a little something special going on. Let's look at the T-SPY is an example. T-SPY took its high by July, and of course, everyone loves that one. It's a good one. Anyway, all right. Back to the factor. Top 20 of the week is the topic. East Houston, Orange is East, Texas. Yeah, I got you, Chad. I got you. Number 14, WEEI. So I'm seeing the same theme persist here because it's energy. And, well, I was going to say, and even the S&P fund here, this is one of the less volatile out of the S&P funds. And we can look at the stable dex. It has a 106. I mean, it's on the safer side. This is not like leveraged or something. Is my point. And I bet we don't see anything leveraged on here just because the kind of the infrastructure, natural resources, and value things are kind of taking the lead. I don't know if you call it rotation or whatever, but those funds are doing well. Look at this, Marnie. I mean, come on. I'm going to call BS on this. Marnie, are you serious? It has a 5% NAV return, so the NAV went from 16 to 20. That's more than 5%. That's like 20%. Anyway, whatever. I won't get upset about it, but that. Well, anyway, but Bernie is doing a good job. In fact, it should be more than that. That's 25%. I don't know why that says 5 there. Anyway, but Bernie's been killing it. I think the NAV's up about 25% the quarter. Now, the 1 year total return for Bernie, if you look all the way over here to the right, but I guess you could call Bernie a value stock. I mean, Bernie's definitely not a momentum stock. So see, I mean, it's definitely it seems like the leadership's changing. Now we have GUI. Now this is tech and leadership and whatever. But a month or two ago, GUI was number one. GUI and Hui, it seems like we're number one and whatever. But anyway, that were a couple months ago. But GUI's number 12. Let's see who's number 11. Number 11 is Goop. So Goop is based on Google, but it's from Curve. Curve is more conservative, and you can see the Curve pays about a fourth of the yield. And Curve got about 4 times or about 3 times the NAV return, but paid about a third of the yield. I mean, so it's almost symmetrical. Goop's a little bit better deal for the money and when you consider the risk. But even when you look at the risk, they're both the 53 on the stable dex. So these guys actually have identical, statistically anyway, identical volatility. All right, number 10, Gold. See the same thing continuing with the precious metals. So this thing's yielding 11%. NAV went from 42 to 52. I mean, that's up 20%. Not very stable, but whatever. Let's compare Gold to Gold Eye. It's just so Gold Eye is from Defiance. Defiance pays more yield. It's also more risky, so they're going to do less NAV return. But so the yield on Defiance is 46. The yield on Gold is 11. So let's compare the NAV return. The NAV return on gold Y is only 1.5, where the NAV return on Y gold is 19%. It's about, it's about 10x as much. And that's why Y gold is ranked way ahead on a risk adjusted basis. It's doing better. Look at this. Does Y gold really have a 1-year total return of 119? I think it does. I mean, that's sick, isn't it? I mean, that is sick. Sick in a good way, or whatever. You know what I'm saying? I mean, holy cow. I mean, yeah, there it is. Performance for the year, 102.79. So yeah, that was right. All right. Well, man, look at that. Y gold. I'm so glad I got K Silv and K Gold. I mean, I'm so glad I got him. I was going to get less also, but I got more. I wish I would have got even more, but that turned out to be a really good. Those turned out to be really good so far. Anyway, we'll see. All right. Number 9, XOMO. This is kind of a blast from the past. I mean, it's energy. That's the theme: energy, natural resources, and value. And things that weren't leaders last year, basically. Rotation. I mean, what is Murney? Come on, I can't believe Murney's on here. Anyway, XOMO pays 28%. I mean, I don't care for that. I had that one and I sold it. I just don't care for the single stock ones, but it could work for you just because I didn't like it. Look at Fiat. Now Fiat's price went from 27 to 23 and a half. Or no, I'm sorry, it went from 23 and a half to 27, and it paid a 25% yield. Not stable, but who cares? Number 7 is Gold Eye. Gold Eye, 16.67% yield. Price went from 167 to 179. NAV was plus 7.3%. Super stable, especially compared to the other gold ones. Look, the Gold Eye is a 1.23 on stability, where Y gold is a 0.39. One of them probably uses leverage. I'm looking at you, Y gold. And one of them may use daily option. I mean, and I bet one of them also goes out further in time with options. I bet whatever. Let's actually look. Let's actually. Should we have a battle royale? Let's see. Let's do one. The first battle royale of the night. Y gold and Gold Eye, right? That's what I was. Yeah, Y gold's evidently levered. I mean, you guys are probably talking about it. And we talked about it, I think on Friday we were talking about it, but yeah. I mean, Gold Eye up 37% in just over a year is not terrible, but I mean, yeah, Y gold is insane. Y gold's absolutely insane. Y gold's, I mean, let's compare Gold Eye to Gold Y, to the Defiance fund that somehow slipped in the top 20. Gold Y never gets in the top 20. Gold Eye is always there. This Gold Y is just kind of a constant underperformer. It's just one of those funds. It reminds me of Feed and 5E. All right. Yeah, Gold Eye is just Gold Eye. Gold Y lost NAV. So that's one thing, and people hate losing NAV. So it doesn't matter what the total return is, but it lost NAV and it has worse total return. If you're going to lose NAV, you have to have better total return. I mean, generally in my opinion, a lot better. But still, some people are going to take a pass. But yeah, I mean, anyway, but they did pay $6.58 in dividends on 20, so yeah, about 32%. And these guys paid 27 on 160, so about 12% or something. Anyway, you can see it really shows in the returns. A high dividends, a tax on the future upside, tax on the NAV. IAUI, okay. Well, look at this thing. Yield is 11.76. NAV's gone from 53 to 60. It's about a 13% move. Stay almost as stable as the market. Number 6 on the max factor. IAUI is a good one, and it shouldn't really surprise us. It doesn't surprise me because it's from NEOS. NEOS is known to put out good funds, as you guys are aware of, or blue chippy type funds, and they do a good job. Let's see. But let's check IAUI against Gold Eye. Gold Eye is kind of the impressive one. Why gold's impressive, but it's like a sideshow a little bit. Because, I mean, it's impressive, but it's not a fair comparison. Now, Gold Eye and IAUI, and Gold Eye is a pretty impressive company, and IAUI is leaving it in its dust. Now let's check the dividend. IAUI paid $4 on 50. And these guys pay, so it's about 8%. Is that right? It's about 8% for half a year. Yeah, that's about right. And these guys paid 20 and 160. So these guys, what's 1/8? About 12%. Gold Eye pays a little bit more, but you don't do a little bit worse on NAV. But both of them did well. I mean, 162 to 179 is not bad, but it's not near as good as 50 to 60. Anyway, those are impressive. Great time to be a gold investor. Wish I had more of it. CVNY, Carvani. Where did this come from? Carvani? This can't be right. Man, Carvani's doing well lately. I didn't realize Carvani had been doing as well as it has been lately. Okay, well, very, very good. Heck yeah, Carvani back to the party. And it's a yield max fund. Wow. Too bad there's not a CVNW. I mean, because it would be ahead of it. Lower yield, but better NAV. Anyway, good job, Good job, Carvani. Not super stable, but whatever. GOW, Google. All right. This thing, or it's the Round Hill Google-based high yield fund. Went from 64 to 73. The yield is 42%. NAV return is 13%. That's not bad. And you could compare GOOW with GOOP. Let's just line it up right here. NAV return, W got 13 and P got 14. I mean, that darn Howard's impressive. But the reason that W's outranked P is because when you factor in, yes, Howard did a little bit better. P did a little bit better, maybe 5% better here. But when you look at the NAV, when you look at the when you look at the yield, in GOW's yield is 4 times as much. It's all about risk-adjusted reward. The yield's your reward. The NAV's your risk. Anyway, let's go to number 3. I'll get to those questions in a second. We can, if you guys want to look at different stuff, just put it in there. All right, Silvo, I saw. Look at this. Look at this. We had a comment on Silvo. Or no, I thought that was, here we go, here we go. And I think that may be, you may, Paul, are you a first time commenter? If you are, I appreciate you commenting. I really, oh my goodness, you got to be kidding me. From the mighty state of Mississippi, we have an option bro. We have several option bros in the house, but one in particular I'm thinking of from Mississippi, and that is SB. Hey, SB, how you doing? I guess the storm, I guess you're all right. It looked like Mississippi might get it, but looked like maybe the worst of it was maybe more towards Tennessee and, or I don't know. Anyway, it looked like even Atlanta got some snow. Anyway, we're all good here. But hey, thanks for checking in, SB. Thanks for being here. Okay. So 1320. Oh yeah, no. He's right about that though. Defiance is a bit. Yeah, you could say Defiance and Oklahoma play offense like each other. I mean, Oklahoma this year just had no offense, all defense, but just couldn't. It just virtually no offense. But about 10 years ago was the opposite. We had no defense, but whatever. But Defiance, yeah. I mean, it's whatever. You know what Defiance is more like than Oklahoma? Defiance is like Oklahoma. Defiance is like the 2018 Oklahoma Sooners. And I love that team. It was a fun team. It was Kyler Murray was the quarterback, and we scored like 80 points a game. We had the highest average point. I mean, we averaged like 48 points. I think it was the second highest total in NCAA history. We just had yards. I mean, stats out the wazoo. Kyler Murray's like a freaking, he's like a video game. He's a cheat code. He's a human cheat code. You guys know that. Well, anyway, but we couldn't win. I mean, but when it comes to trying to play Georgia, and we needed to, be able to hold Georgia at a key time a couple of times and couldn't hold them, get the ball driven down our throats and lose the game. That's kind of like a fun, to me, that's an analogy for a fun that maybe just does a great job paying. Oh, yeah, that's offense. But then maybe, at the end of the year, you're behind another fun. You lose the championship. Win the battle, but lose the championship. Win the battle, lose the war, whatever. Okay, let's get back to this. Anyway, number 3, Silvo. Silvo's impressive. I mean, I don't have to tell you guys that. Look at that price, 87 to 102. I mean, that's a 17% on NAV. And remember that NAV does not include dividends. So you get this number and you get this number. I mean, or you have been, that's what you have got. And look, 1 year total return on Silvo is, man, that's crazy. It's 66%. All right, it's not as good as Weigel's, but all right. Number 2. Number 2 is K Gold. I like this. I like it because I have it. Only yields 8%, but I mean, it makes up for with NAV. 45% NAV return for the quarter. None of these other ones can touch that. Even the one that was wrong, that was 5, that should have been 25, which is a lot, can't touch it. Weigold is 19, can't touch it. IAUI is 14. GGN is 16. All right, good job, K Gold. You guys know who number 1 is? Number 1 is GDX freaking Y. 47% yield. NAV's only up 20%. I don't understand why this is number 1. Well, yeah, actually, I do. That makes total sense, actually. You get 20% NAV return with the 47% yield. That's even better than getting a 45. Yeah, that's even better than what K Gold did. But anyway, all right. So GDXY is our winner. Their editor's choice. I mean, yeah, I could override it. I mean, because I thought it was kind of, I mean, but I'm not going to override it. The numbers are what the numbers are. Plus, let's look at the 1 year max factor. Let's do a 1 year max factor really quick. All right, so the 1 year max factor based on the 20 that were in here. So this may not be the actual winners of the 1 year if we would have pulled from the whole sample, but whatever. Weigold, I mean, Weigold's a monster, 119%. I just should have put everything I have in Weigold, and we should have all done it. And we, if put it in Weigold, everything we had in Weigold and Bitcoin 3 years ago, we'd freaking be retired. All be retired right now on the beach and not retired freezing to death in the cold. Anyway, all right. GDXY, Silvo, Goop. Look at GGN, 46%. ASGI. These guys in there like closed-end funds. You guys turned me on to those, and you guys are right about those. Or I don't know, right or wrong is the wrong thing, but a closed-end fund can definitely has the ability to compete. Anything that pays a monthly check and is reliable, like Cornerstone or whatever. In Cornerstone, I think they sell covered calls. I mean, those are option-based strategies. I mean, they do all kinds of different things, but I think that's part of it. So those, risk-adjusted reward. And, you can look at GGN and ASGI, and you could say out of the 150 stocks Max follows, probably 100 of them been around more than a year. So maybe out of the 100 ones he follows that have been around more than a year, there's approximately there's 5 that have had 4 that have had a better run. I mean, Goop, Silvo, GDXY, and Weigold. But, gold and silver are having a generational run. So really, if you just eliminated that to just a once-in-a-lifetime deal, you could say Goop is the only one that outperformed the closed-end funds. And those closed-end funds are, they're good. But, of course, and it really shouldn't surprise us that much because, once again, Curve and Neos, Curve especially is more known. Curve and Neos are kind of more known for NAV protection type stuff. You guys get that. All right, what do you guys want to talk about? Let's look at the darn market, see if the market's moving. I'm trying to think if I had other stuff to talk to you guys about. Usually I just leave windows open. But if you have a question, we can pull open Google Sheets and we can look at anything. If you want to say, hey, how's my favorite fund, whatever doing, we can look at it and run it against whatever. Anyway, all right. So, but let's look at the divas really quick. Which do you think is going to be the first diva to get its head above water? I say QLDY, or QLDY is actually an understudy or diva, but I don't know. It could be K yield. If we have, it could be K yield, but I'm going with QLDY. No, I never bet against Howard. I'm going with K yield. But anyway, we'll see what happens. They're both 3 or 4%. Maybe by this week they'll get ahead. Although I'm not super. Well, let's look at Bitcoin really quick. I wanted to look at charts. Why didn't I look at the charts? Where is the charts at? Where are the charts at? I should say. All right, so let me make sure you guys can see that. That's awesome that the pie's up 8.7%, 6.7. Okay. Would you take a look at that? Silver up 7.3%. And a good thing a good thing that I'm using the manager that's getting 1-to-1 upside because he's using a little bit of leverage. It doesn't matter. I mean, it matters. It's great, but anything I had based on silver would be great. But I happen to have the best one, in my opinion. So let's check in on Bitcoin. Bitcoin worries me because it's a risk asset. that's highly related to the tech sector and to AI, which is a big leadership in the market, and it's just freaking getting killed, but whatever. At least it bounced. Earlier today it was down to 85. Yeah, I mean it was down like 3.7%. It seems like today, right? Am I just dreaming? But I'm looking at the numbers and seeing if that could be right. I mean, anyway, it bounced heavily from when. Yeah, I guess at one point it was at 85. Yeah, so yeah. Anyway, this chart, the indexes are a big mess. Just because they haven't gone anywhere in forever. It's starting to be kind of like summer. It's not as dead as it is in summer, but in the fact that they just trends aren't persisting. And all right, so that's the cues. Here's the SPY. I just want to take a look really quick. Okay, the SPY. To me, it looks like a great time to put on protection, and that's why I put on protection. Look at this head and shoulders. Classic, there's a double head and shoulders. There's the head, there's the left shoulder, there's the right shoulder, and then there's a head and shoulders within a head and shoulders. And if you take the measure move of this, I'm just joking. Anyway, I'm just not liking what I'm seeing, but that's fine. I'm allocated appropriately where I don't have to worry about it. Okay, so maybe we need to allocate the pie more appropriately. Maybe we need to put the pie into something. Try to preserve some profits in the pie. Can you switch in the pie, or do you have to switch it in the same? Or does it have to be in the same thing? I wonder. Or how often can you switch? I know it's not like a day trading contest. You probably can't switch all the time. Yeah, silver got their brakes blown off. Yes, absolutely. I think K-Silv may not. Bond's asking if he missed K-Silv. I think K-Silv may not be old enough to be. But that's a good question. And any other Max Factor questions, this is the time to ask it, because we have the Max Factor right here. We can look at any of them. I think maybe K-Silv isn't old enough, but maybe it's got to be not old enough, or I had a data error. It's a user error for sure, because K-Silv should be there. It's either not old enough or it should be there. So I'm going to look at my main database, which I know this looks like a mess here, but just ignore it. Ignore it. K-Silv 9:30, 10, 11, 12. Oh my gosh. Yes, they became eligible on New Year's Eve. They've been eligible for freaking 3 weeks, and I haven't had them in there. I'm so sorry. Oh gosh. Okay, well let's just place them ourselves. Let's just run over here to the max factor. I think that's here right there, 2.63. Yeah, 2.63. So let's run back over here. Number two, they would have been 2.63 would have put them at number two, ahead of K Gold. God, I love that. K-Silv and K Gold, number 1 and 2. Oh man, I'm so glad. And Howard has been if you would have told me when I first started this out that Howard was going to turn into a freaking superstar and a flamethrower, because he used to be kind of quiet. I'm talking like 2 years ago, and they're fun. They don't have very much AUM and stuff. But man, he got on social media. He's a social media darling. I enjoy his tweets, and I mean, he Howard's good at reading the room. I'll say that and I mean, better at reading the room than other managers are. I think he's just reading the room and just giving people exactly what they want. So anyway, I think he's doing a good job. But there's other managers out there too that are doing a great job. I think the guys at Rex do a good job. Of course, Neos. I think Yield Max has some good funds. I really think I really think the Tuttle's doing a good job. Now, I know it doesn't show you it in the results of the two funds he came out were based on Mr. and, MSTK. And did any of you guys have MSTK and BITK? Anyway, I have a lot of interesting people. So what are you saying? Oh, Granted Shares. Yeah. Granted Shares is like the 2018 Oklahoma Sooners. All offense, and yeah, not a lick of defense. We let BR's Georgia freaking Bulldogs. We were up like, if you score 50 points, you should win any game. That's rule number one in football. If you're going to win a championship, that's why you have to have some kind of defense. Defense wins championships. And we freaking let Georgia. Oh my God, we can't even hold them. It's a nightmare. We had Kyler Murray, once in a lifetime generational talent, best quarterback we've ever had. I've been watching OU football since '73, and he's better than Jamel Holloway. He's better than Troy Aikman. He's better than Sam Bradford. He's better than any of them. He's generational talent. Better than any of them. Better than Baker Mayfield. A lot better than Baker Mayfield. And those guys weren't slouches. Anyway, yeah. Hey, SB, yeah. Text me. I'd like to check out that option screener. I'm good. I'm glad that you guys are good. I guess everyone's good because of the weather, because I haven't seen it in the comments. All right, I'm just catching up on all these comments. If there's anything else you guys want to talk about, put it down there and we can look at it. Defiance. Okay. The thing is, so here's the thing where it helps to be an educated consumer. And I know you understand this. And this is why it's good to be in our Discord or whatever. Because the thing that Defiance is doing that makes it risky, and you guys know this, but I'm just going to reiterate for the people watching, or it gives it an extra element of whatever is the fully capped upside. But since we always talk about options, we know that the way QLDY is doing it is like blocks. They aren't capping their upside, not even at all, not even a little bit. But we're cautiously optimistic in watching the results, because the uncapped upside also introduces its own set of, its own little situation. But I just think I don't think, in other words, I'm telling you, Defiance or Yield Max isn't the problem, but or Granite Shares, but you put a fund in that sells and tries to make their goal to get as much premium as possible. It's just kind of a recipe for disaster. And but then you put in funds I think the funds that do a little better are the ones like Howard or like Rex, where they consciously try to make a little less. They don't try to make what they could. QLDY could pay a higher. They aren't trying to maximize yield. They're trying, with that strategy, they're trying to maximize. I mean, they're trying to get yield, but they're really trying to get an NAV return. So I really think that QLDY is nothing at all like the other Defiance, or like Yield Max or Granite, or for that reason. It's its own deal because of the strategy. I think the strategy differentiates it. It's not just QLDY. We've seen the same strategy work on blocks, and not work, but we've seen how the same strategy works on blocks, but for the past 6 months or something, and it's impressive. And I think QLDY is impressive. But I get that you're nervous because it's from Defiance and their track record. But I'm telling you, I just don't think it's when they make the decision to do the strategy's the problem. I just don't think the companies are the problem themselves. I don't know. But anyway, and also the other thing is, if we just quit buying their funds, they'll switch their strategy. We're as a consumer, we have the ultimate vote. We vote with the pocketbook. But I think QLDY will be all right. But it's because it's apples and oranges. And I'm telling you, Defiance or Yield Max or Granite, none of those guys are doing anything nefarious. They just made the decision that they're going to put out funds that maximize yield. When you maximize yield's a tax on NAV. And so I just think it's more of a corporate, a decision from the top. Yes. Okay. So Georgia run game was running. Yeah. Howard looks like he's 17. He does too. and he's so polite and meek when you have him on the show and everything. So, and then he just gets on Twitter and he's just throwing flame, he's a flamethrower. I mean, I love Howard's something else. He's doing a great job, but that's when you have to be. The successful managers are all flamethrowers, or not a flamethrower. You have to be a frequent poster. Even when news is bad, like blocks, David always posts. Even when things are bad, he'll post, and people will tell him your fund sucks and stuff. He won't argue. I've never seen him argue with them, but he'll post even on days he's down 5% and 6%. So anyway, but I really think the active social media presence is almost a given for in that in that space. All right. So who? Oh yeah. Oh, Defiance. Okay, Defiance. Yeah, I think Defiance is Miami people, but they work for Direction. They're New York. I mean, they're legit. It's legit. I mean, the Defiance has other good funds. I mean, what's the matter with SPY T, the triple QT? And but actually, it's just kind of the same thing as QLDY. That fund. They actually made the conscious decision on that fund to not get as much income as they could. So that kind of helps out those funds. But anyway, all I'm saying is I take it on a fund by fund, strategy by strategy basis. I mean, I absolutely love some funds from whatever company, but then I wouldn't touch other funds maybe from the same company. So anyway, what's a current? I don't get that joke. Kirk Signetti. All right, so let's do this though. Let's look at going back to the divas. Then we have GPTY down 6.7. We have WPay down 12.9. LFGY down 14.6. ULTY from YieldMax down 16%. Blocks down 17.5%. And then we have ULTI down 23%. HOOS ETF. Oh, is he? Okay. He's the Indiana head coach. Okay. As soon as the Sooners lost, I quit watching. I didn't even see the national championship game. I forgot it was on. And then, and I'm working anyway, whatever. I was probably working on something, probably doing the Max Factor or something in here. So, who's your ETF? Okay, HOOS. All right. Let's check out this one. Are you just saying that would be a good one based on the Hoosier, based on the economy in Indiana? You know who's from the great state of Indiana? The best company from the great state of Indiana, probably the biggest company, is Eli Lilly. I would imagine there may be a bigger one. I'd imagine probably Lilly's the biggest one. Their world headquarters is out of Indianapolis. See what S&P futures are doing at this hour. Look at that. We had a gap down in futures. These are half-hour bars. About was it 0.5% or something? It wasn't, but it was a decent-sized gap. Came right back and filled it. Looks like right pretty much to the penny, and then kind of turned around. In a broader perspective, we had the same thing happen a few days ago, and it happened. The gap got filled quicker. We had a gap down. This was last weekend, and it took all week, but we didn't even really quite. If you include this tail right here, I guess, yeah, that's just, we filled it. So we basically, yeah, that gaps was filled right there. And then since then has gone south. So, you know, bears definitely want to make this one keep going south. And bears do not want to give up this gap and let the bulls get loose on the other side of that. But the counter or the bullish case to that is the Qs are already through that gap. Well, okay, well, that's the Qs, but the counter case is the NQ, NASDAQ futures. You can see on NASDAQ futures on today, they filled same thing. They filled the gap, today's gap, but then on the gap the other day or last weekend, they actually filled it by Thursday and have been trading on the other side of it, but now they're back on this side of it. Anyway, key level right there in the NASDAQ is where we're at. I'm bullish above, bearish below. I'll make a prediction. If the NASDAQ goes up, I'm bullish. The NASDAQ goes down. No, but I think that this is kind of a 25-6 or whatever. Plus, it's also, you can see it's a mean on the chart. It's an important area on the chart. I'm bullish above, bearish below. Yeah, Eli Lilly. Chad, weren't you the one saying they're putting a factory in Houston somewhere, or was that somebody else in your wife? But anyway, somebody says that they have a. Now I think that may have been somebody that lived out in West Houston. I have 4 or 5 people from Houston, and I'm mixing all the stories I've ever heard. There is somebody from Orange. It's not you. I'm missing all my Texans up with their Texan stories. We have Ola. There's RJ. RJ's a Texan. We have, I believe he is. I was going to say we had somebody else in here from Dallas, but I'm trying to look at the names and think who it is. Is anyone in here from Dallas? Anyway, silver, gold, nat gas, and VIX looking good for tomorrow. Heck yeah, DFW. Okay, yeah, RJ's DFW. Okay. Easy life's the only Houston that matters. Okay, and you're in Houston also, 1320. Texans need a new quarterback. Yeah, I hear you. How are the Astros going to be in baseball this year? It's probably too early to talk about baseball. I love the Astros, but I haven't watched them in a couple. I used to watch every game. 2 or 3 years ago, I got really into it, but then I got off of doing it for a while. Anyway, yeah, 1320. What part of town are you in? Yeah, CJ Stroud. Yes, it's trash. I would agree with that. I would agree with that, and I'm an expert on the NFL because I won my league's fantasy. I had Dak Prescott, and I had right. I had Dak. Yeah, I had Dak, and I had CeeDee Lamb. And then I had some other good players too. I just got lucky. I mean, I got lucky because I didn't even want to play. I ended up winning the whole thing. All right, what are the roads there doing? The roads are just like riding. Oh, really? Oh, in Houston. Okay, I'm getting confused though. So 1320 is in Houston. I thought you were in Dallas. No, RJ's in Dallas. And I know who's in. It's driving me crazy. I'm going to look at something. Um, maybe Learning Daily Dave. Maybe is he from Dallas? Anyway. Yes, the name doesn't make sense. House Texans, it's like Baltimore Marylanders or the Cleveland Ohioans. I got you, 1320. All right. All right. Well, what else you guys want to talk about? Got a big interview on Friday. Matthew Tuttle. And he's bringing out some really good funds. Let's look at this one really quick. Does anyone have this one yet? Let's look at the holdings. So this is Tuttle's version of ULTY. Everyone's got to have a ULTY product lately. So, this one, well, the stocks are SanDisk, Iron, Lunar, LUNR, whatever that one is, UUUU, EOSE, SMR, VKTX. Hang on here. The stock. Here's all the stock. I mean, CrowdStrike, Coinbase, ASTS, EOSE, FCX, Hood, IONQ, Iron, KTOS, Lunar, Materials Processing, Palantir, Reddit, SMR, SanDisk, Symbotic, Tempest AI, Teradyne, and UUUU, and VKTX. Pretty typical lineup. Those are the same. We see those stocks all the time. You know what I mean? In certain funds, those types of stocks. I mean, it's very comparable. Now we'll see how it does. Now, that here's, I'm going to give the good thing. Here's the good thing about it is the uncapped upside. Because these guys are doing or for instance, let's look here. Let's pull up option strat. I have one of the trades in here. Let's do this. All right, I have the Coinbase trade. Well, but it already expired. But that's fine. Okay, so that's what it does. Gosh darn it. I was trying to show something that's not showing what I wanted to show. Well, that's a good looking trade. All right. All I was going to say about that one, the thing that worries me about it, and we can ask Tuttle about it, is there's no limit on how far it can go down. It has uncapped downside. This one does. In the same way that ULTI does. And we saw what happened to ULTI in a bad pullback for meme stocks. So, that's it. Because they own they just basically own the stock, and it's just like blocks. On a down day, they're going to get whatever their stocks are down plus a little bit extra. And these stocks are crazy. So, I mean, definitely use caution. I don't know if anyone has this. I'm interested in it. It does have uncapped upside. This should be hellacious in an up market. This should look like this. This is going to do what makes people so upset about ULTY, or what I think is the biggest problem with ULTY is the lack of upside. This shouldn't have that problem, but it might have the opposite problem. So anyway, I thought that was I'm keeping an eye on that. I'll have some content on it soon or something. But I wanted to talk about Meme Y really quick. Where is damn StreamYard? Got to get a multi-touch surface. All right, there you guys are. Who's moving to San Antonio and New Braunfels? New Braunfels, yes. That's a hot area. New Braunfels, San Antonio, northern. That Kyle, San Antonio, or Kyle, San Marcos, Kyle, New Braunfels, kind of a hot area. Yeah, GDXW has been a beast. The Precious Metals Coach. Well, you're a first-time commenter, or I haven't noticed you yet, but I appreciate you being here. AGQ is wild. Let's check it out. Yes, that is wild. Silver times 2. Wow. 700% performance for the past year. 100% year to date. That's insane. That's insane. Well, yeah, we'll do a Texas. I'm going to have a Texas meetup sometime. Or I'm going to have a meetup for sure sometime. So Easy Life's trying to get us to come to the east side of Houston. Had to bring my Glock with me, but no, I'm just joking. I'm just joking. I've been to the south side of Oklahoma City. I promise it's as bad as it's as rough as any place, else. What did you pick up here, RJ? You picked up some DXYZ. It's a closed-in fund based in Austin. Really? All right. DXYZ. Probably some private equity. There's a lot of private equity people here. Destiny Tech 100. Heck yes. Heck yes. All right. Well, let's check this. I was going to check its holdings, but it's a closed-in fund. So it doesn't show us its holdings. We'd have to go to closed-in fund, CEF Connect. But still, we can see some stuff on here. I like to look at here too. SpaceX could launch largest ever IPO next year. Heck yeah. Heck yeah. That looks cool. Uh-oh, here's somebody who says why I wouldn't touch it with the 10-foot pole. Come on. He doesn't know what he's talking about, though. I'm just trying to scan it really quick. So, oh, they're talking about some GSV Capital. They probably lost money in some other companies. Who knows? I don't want to get into that drama right now. I don't even want to get into that drama right now. I was just joking about that. I was just joking. I'm sure it's great. I'm sure it's great. Yes, Austin is an interesting city. So where was the 24-hour diner that you like? Probably on 6th Street. I mean, I know of a couple. There's one, but I'm trying to think of. I've only been here 10 years, but anyway. But yes, it's a great city. I'm glad I lived here. They have Discord also, really, and Discord's going to IPO. No, that is interesting. That's a good looking fund. I mean, I need to maybe do some content on it or something. DXYZ. I mean, isn't there another fund we follow, XOVR, that's similar, that has some SpaceX and then has some other tech companies that are calling, I think that's XOVR. Anyway, now those guys have some competition. I hear you. Yeah, I hear you. On Easy Life lives in a good pocket. Yeah, I know all about good pockets. All right, guys, well, I'm going to get out of here. Jackson still has on his sweater. I can't believe he hasn't rooted himself out of it. You know, I mean, I used to have a dog that would never, I'd put clothes on it and it didn't want to wear it. Jackson's just loving that sweater. He's just laying there just chilling. His turtleneck is cardigan, or it's a turtleneck. Jax, do you want to come make another appearance? All right, that's Jackson's appearance. All right, Jax, you made your appearance. All right, guys. Well, I appreciate y'all for being here. Oh, yeah, Magnolia, that's still here. And yeah, and that actually, and that was the first 24-hour cafe I went to when I got to town. A friend took me. A friend said, you got to go to Magnolia. That's the place. And the location I went to is now closed, but they have 2 other locations that are still open. Yes, I love it. Yeah, Magnolia. That's the one, too. I was thinking of another one, but yeah, that's the one right there. There's another one that a lot of people like also call, I forget what it's another 24-hour cafe. It's right on UT's campus on the drag. And a lot of people swear by that one too. But yeah, that one and Magnolia are the two to go to. All right, guys. Well, is the stock exchange open tomorrow? Why wouldn't it be? Is it a holiday? Is it MLK Day or no? Or was that last week? Was MLK Day was last week, right? So why wouldn't the NYSE be open tomorrow? Because of is the government shutdown or that? Anyway, Max try style switch for barbecue there in Austin. Because of weather closings, really, I didn't know it was that bad in New York. Okay, yeah, okay. Oh my gosh, I need to check on my cousin. I mean, I should have because I should have, but I just didn't realize. Now I could see in Dallas people closing. In schools and stuff because Texans on the ice and stuff. It just surprised me that New York is but anyway, yeah, I just hadn't heard about that yet. Well, that should be interesting to see. That should definitely be interesting to see. All right, well, I'll be on with the morning show about 9 my time and about 10 you all's time, and we'll see what's happening at that time. And I will talk to you guys then. Thank you so much for being here tonight. And I will talk to you tomorrow, or if not before, in Discord. I'm over in Discord. I'm back over in Discord all the time. Anyway, I'll be back in Discord from now on. So I'll be more, I took like a 3-week break. I haven't been hanging out in Discord more, but I'm back. All right, guys. Thank you so much. Have a good one.